Hi, everyone, and welcome to today's weekly market check-in with myself, Greta Wall, and the leader of T3 Live's Inner Circle Virtual Trading Floor, David Prince. Hi, David. Thanks as always for doing this today. How's your day going so far?
My day is quite good. Zero complaints.
All right. Now let's get right into what I can imagine is part of what is helping your day be good, and that is Viking Therapeutics this morning. You sent out this tweet yesterday saying VKTX will oral data be tomorrow, dot, 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 giving a hint that you thought the company's weight loss drug data was coming out today. And you were right. Here's a look at the chart as of 10:14 this morning, trading above that 21-day moving average, a big gap up this morning on that data. You sent out these tweets saying you trimmed some stock and you had calls as well, saying it's been delightful, but you took your size down and will remain a buyer on weakness. This data was just what the doctor ordered. So give everyone a reminder of VKTX when you got into this stock, how you've been trading it to this point, and how you plan to manage your position as we move forward.
Sure. In short, the category is weight loss, which most know by now, and there's some monster players in it, obviously. Novo Nordisk is the recent player to get involved that's had some success specifically with an oral drug, but we all know about Eli Lilly and Ozempic and how just it's a monster growth category that people like Kramer could say contribute to the growth of the economy, that it's so big.
Mhm.
So Viking, which was a tiny little company most didn't know about, presented some amazing data that looks to directly compete in the category, not like at a lesser level, but just a solid outcome. But people were really curious about the oral data, especially when it took a hit because Novo Nordisk had some pretty successful data via pill. And today we got that data. And I think what was most important to the people that move stocks, not the retail investor, was that it's successful versus placebo. But most importantly, that there were less side effects than any product out there presently that we've seen via trials. And even Novo didn't show us the side effects of the trial. So people are really beholden that this is the right play to be in, and that it's probably early in the game. And I think most of all, I don't like hyping this type of stuff, but everyone is now, people that were convinced it was a very strong takeout candidate are now more so. That there is now very little reason why one of these long suffering healthcare companies like Pfizer doesn't try and fix how far behind they are on some major categories and make a bid for Viking Therapeutics. So it's a huge win. And recently, what the good news is, it gave us a chance to buy it. It broke syndicate bid after secondary. You had the Novo news, and the stock traded the low 60s last week. I bought some at 65. So it's a huge win. But I think really has a lot more to go. I'm not one to buy stocks when they're up 20, so I'd wait for a pullback. But looks like a long future ahead for this one.
The biotech space has been a huge space for you personally throughout this year. XBI, Viking, Immunome, especially. Yeah. So, what is it about this space in 2024 that got you so excited to participate?
So one is as simple as price because it
Hmm.
severely underperformed for 3 years. And sometimes, even if it's not the perfect scenario, and what I mean by that is everyone wants lower rates for a small cap type space, which in essence XBI is, to work. But sometimes price can get cheap enough that it presents a buying opportunity regardless of the macro picture. And that's what we saw with XBI when it was the mid 60s. And what it basically represented was a lot of companies that had some very significant products in cancer, in weight loss, that ultimately might achieve a lot of success and in turn hundreds of millions of dollars in net income. And XBI wasn't pricing it in. And then moreover, when you get these specific stories like an Immunome, where one of the top dogs that ever walked the earth in biotech takes over a market cap company that's less than a billion, right? Whereas last company's being sold, Seagen, for 40 billion to Pfizer. That's a specific scenario where you don't have a trial coming up, so you don't have that risk that you typically do with biotech, and you have the top dog coming in. So there've just been a lot of specific events because of the poor returns in biotech for the past 3 years that presented just amazing opportunity via price. So I would just say significant underperformance made a ton of these merger candidates, takeout candidates, and just great buys. And that's what 3 years in the toilet, excuse the expression, will do. So I thought, enough's enough. Some of these are too cheap. And then weight loss took off, and I think we had some solid cancer results, and people started to realize, this is the lifeblood of healthcare. This is how people grow. This is how we survived through COVID, by some of these biotech companies like Moderna. So people woke up.
All right, great. A reminder for everyone who's with us live, if you have any questions for David, start submitting them now so we can make sure we have time to get to them before the end here, because of course David is a real trader and we do eventually have to let him go back to the market. All right, David, another big winner for you lately is Micron. You sent out this tweet on Friday saying it's a great example of why charts are only half the game. Broke below its earnings day low, you started long, and then and said many won't till it finds a bottom, but you would add into the 105s. Did you know that the 107s were the low? No shot, but darn happy you went long. And it wasn't just you that did well with Microns. The screenshot from the Inner Circle chat. Thanks for Micron. Well done. Micron, great call, DP. Thank you. The 45140 calls just went from 14 cents to 52 cents. Late to the board this morning, but I started Micron 115 calls with you last week. Great call. Nice morning. Thank you. And this was on Friday. And he got a shout out on Twitter for this as well, saying great call by David on Micron. David has an edge where he identifies winners for the chat post earnings, long or short, takes event risk down and makes the trade much simple. Micron, Palo Alto, Adobe, NVIDIA, only a few examples, best of all the chats I follow. And then yesterday, Monday, you said you came into today with the 110 calls that went deep in the money, closed them up 150%, went to the 120s, now up big as well. Definitely one of the most potent breakouts since Onyx Jaw ruled Tupac and Puff ruled the airwaves. I shall stay on the train for weeks to come is my guess. And just one more yesterday, after the market closed, you said Micron is getting what we call re-rated as a growth stock. That means good earnings equal higher stock price and multiple. It's powerful stuff. So talk about your Micron trade and the future of what you're seeing from Micron based on kind of what you said here, comparing it to Apple, for example.
Sure. And I'm going to be somewhat detailed because there are a couple guys asking me on Twitter yesterday. They're like, Micron, why do you like this? And it's a crap company. And they were going on and on. And they were basically doing all the things I used to say 20 years ago when I was still learning. I thought I was intelligent on the CEO selling and basically picking a bunch of reasons why, in their opinion, you shouldn't own Micron. And the opinion was the CEO Sanjay selling. Their opinion was, it's a crap company. I can go on and on. But I learned years ago, thankfully, that perception rules stock prices short term. Only perception. Very often it's not fact. And just take a look at Reddit and what it's doing today. I promise you there was no specific announcement. In fact, this was a deal that a while ago couldn't get off that now is like the hottest deal on the street. So perception is what matters. And here is the perception of the street right now. And part of it is actually true. It's fact, which is that it has been a commoditized company. Memory, in terms of the semiconductor space, is no longer a growth arena. It's a commoditized arena that prices have just gone like this for the last 20 years. I mean, literally gotten crushed. This was once the leading growth stock in the mid to late 90s. Someone reminded me last night it might be 95, but I could care less what the year was. All that's important is this was the leading stock. This was like Intel before Intel. And because their primary core competency became commoditized, it hasn't been that way for years. And it's priced as such. It trades at a PE like Apple used to trade at a couple of years ago, 14, 15, 16 times. Now we have this whole new growth arena that is changing the face of the semiconductor space. We obviously know that's AI, and we know it's led by NVIDIA. Turns out Blackwell includes a whole lot of Micron. So now they're riding the tailwind of the most important growth arena on Wall Street, and I don't know, the last decade or two, which is AI. On top of it, they no longer are just this commoditized memory company that trades at 15 times. So all of a sudden, when you have higher earnings, which they have, and then you get re-rated, that means you can get a higher multiple. So then I walked everyone through on that tweet because sometimes people, make it confusing, but it's pretty basic, right? You're getting a higher valuation per dollar of earnings than you used to, and that shows up in the stock price. So Apple, which basically saw an abrupt halt to their growth on phones, right? Would you agree, Greta, from everything you know in the last year and a half,
Hmm.
phone sales growth is like gone
Hmm.
from everything you're familiar with?
Yeah.
Okay. Did you know that the PE expanded 100% pretty much at one point? If you
Hmm.
didn't know, now you know. So the reason is because it became a services company and got a higher PE based on being a services business and not a hardware business, which is notorious for getting low PE. Western Digital, Seagate, Micron, and all of a sudden became more of a software type play. So Micron, now that it's not just this commoditized play, in a lot of people's eyes, deserves a higher valuation per dollar of earnings. And in English, what that means is good earnings plus a higher multiple, you can really get a big move. Apple, with no growth, stock went up like, what was it, 50, 60%, whatever it was last year. And then you're talking about a monster sized company that saw decelerating growth. So I think that's what's going on with the street. Now, I'm a bit more conservative than most people. So there are guys on the street looking at this stock combined with the longest cup and handle chart. I'm not a chartist, but I have never seen a cup and handle chart that's a 20-year chart. Basically, it's like 20 years like this, and then the last 6 months like this, the handle, and it's insane. And if you're to extrapolate price targets, you can come up with like another 40, 50 to go. The way I look at it is if this went to 140, 150, that's a monster home run because as you can see from that tweet, I was buying it last Friday at 107. Um,
Hmm.
and I think between a re-rating and guidance on memory pricing holding up, so their core competency is looking stronger for 2025 and being very much involved with the Blackwell from NVIDIA, you just have kind of the perfect setup. And why I wanted to go over this, I mean, I'm happy you brought it up, was this. Now you're going to have people who are like, Micron, I'm so used to this. Micron's never moved like this, and it's been 20 years. Like, it's Micron, it's crap, don't buy it. Like, low end product. Oh, the CEO is selling. Like, the street doesn't care. The street cares about what it wants to care about. And those same people probably are saying that about MicroStrategy because Michael Saylor's been selling the last 600 points, but it's 1875. So I asked someone on Twitter last night who was, he was talking at me. Like he didn't hear me. He's just talking at me about if the CEO's selling, why is it being re-rated? I was like, dude, because he doesn't decide if it's re-rated. That's the street, and he doesn't control their perception. But the analogy and the example I gave is this. Michael Saylor is out there selling stock in the open market. All you have to do is Google him, right? He's been doing it for weeks or days. He's making a lot of money doing it. And the stock continues to go higher. In fact, I bought it last week at 1,200 and like low print 30s, but like plenty in the 1,200s. Today it's 1876. So because Michael Saylor's selling, do you not want to make almost 50% because you just want to make a point? Or do you want to make money? So I'm in this business
Hmm.
as old as I am to make money, live a good life, hopefully help some people out and my family too, and not be right or wrong. My perception is right now the street is looking at Micron very differently than they have the 20 years, and I want to be a part of it. Now that means that when it has these insane moves, I'm still a money manager at heart. I take some profits. So we had calls up yesterday 150% that were 110s. Then I moved to 120s. Then I moved to 125s, and I keep taking profits. And today, as it made a new high, I said, please don't drink the Kool-Aid. Be willing to give some profits up, meaning like take enough off here. Because if you try and catch the very top, there's going to be an issue, and let the stock breathe. And that's what we did. So I sold all my calls for a significant profit. I'm holding on to stock. Stocks don't erode. And I believe it will continue to be re-rated. And maybe if it pulls back to 115, 116-ish, I'll add some risk back on. And that's the Micron story. But the key that I wanted to say is don't overthink things. Sometimes Wall Street just has an opinion. And I learned this through mistakes. I remember thinking Apple is a mess. Why the hell would someone buy Apple? And I watched it go up 50%. I realized, well, it really was. I knew it was going up because of services and getting re-rated, but I was too caught up in the fact that the iPhone was slowing and it was dumb. By the way, I still think it was dumb. That doesn't mean I didn't want to make 50% on the stock. So I just love to say it out loud because people just sometimes are so caught in being right versus making money. So anyway, hopefully I wasn't too long-winded.
No, that was great. All right. You, for a long time, have said that Marathon Digital was your favorite proxy for Bitcoin, but that has changed lately. You sent out this tweet yesterday saying CLSK leading the proxies during Bitcoin breakout, now above 2023 highs with 25 the next target short term. Would be nice to see 22s hold. Here's a look at the chart trading well above the 21-day and the 50-day. Those are those orange and purple lines there. Talk about CLSK, why it's become your, your new proxy for Bitcoin compared to Maria or Riot, for example.
Sure, because as you get older, you have less of an ego and you want to learn and you want to know where you were wrong. Turns out I was wrong. I killed it in Mara recently, bought it 17 and 18s, and it went to 23. But the earnest truth is the leader, the way to really play it, if you're going in the mining category, is going to be CleanSpark, right? And you can just look at the stock price. It says why. If you want to know furthermore, it's probably because it's a lot less costly for them to mine and they yield better results. But moreover, all that matters. You can delve into why or just look at the stock price, which is far outperformed. And I said, Mara was wonderful, but let me not make the same mistakes over and over. And the next time we get a pullback in Bitcoin, that's where I'm going. So after selling a lot of Mara as high as 23s, I waited for a pullback. We got that pullback Friday in Bitcoin, wherever it was, 63, 64,000. Sure enough, CLSK was down in the 18s. I said, it might go lower, but I got to start some because I'm not going to get the absolute low. I think I bought 1870 or 80, and here we are. We made a new high on the year. We crossed the 2023 highs, and we did all this without Bitcoin making a new high. So that tells you where you want to be. Sometimes it's as simple as price, right? It tells you the facts. So forget opinions. CLSK is the proxy when it comes to mining to own because it made a new high without Bitcoin making a new high. So you don't need me to tell you that because the price tells you that. Thank God I figured that out. I wish I did 6 months ago. But anyway, I did. I have something in my teeth, annoying the hell out of me. All right, I'm back. Did you disappear?
All right, sorry. No, I had my mic muted. Sorry. All right.
I'm like, right, where'd you go?
Actually, before we talk about Reddit, let's answer this question from Rick. He wants to know if you think the forthcoming PDUFA for Merck will move the stock.
Do not know. That's my earnest answer. Not going to even delve into like potentially what I think. A little bit above my head on that specific question.
Okay, and then I don't think this is going to be something you could surprise me, but I don't believe you trade commodities often. From YouTube, we got a question on what your projection might be on cocoa.
Oh my God.
Price is hitting like 10,000 today.
I'm not trading cocoa, but I do truly believe supply and demand dynamics and the move you're getting, if you can be run over, right? And afford to actually be short something like that, it's more short than a long here. But trying to catch the top is a fool's errand unless you have the liquidity to handle being run over. But I would say we're a little long in the tooth here, and there's more downside than upside over the next couple of weeks. I have no problem saying that. The only thing is you really have to understand that sometimes when you're shorting a name, like we've gone over in the past, I've done some monsters on like a MicroStrategy, you got to be willing to be down 50 to make 100 or 150. So that's the one thing. That is another type of asset that you're not going to get the exact top. So if it's me, unless I had a real bankroll, I'm not going to play around. I'm too busy with stocks, so I'm not going to play around anyway with cocoa, but that's how I look at it.
All right, great. All right, let's talk about Reddit. Last week, we talked about Reddit before the IPO. You weren't very interested in the IPO. You weren't planning on trading it, etc. Stock has been on a tear since that debut. You said yesterday on Twitter with a shocked face, Reddit plus 46% on the day now. So give me your opinion on Reddit. I think I could kind of get a
I
gist of
have
how you
tons of
feel about the
opinions, even though
stock,
I'm
but
not trading it. Like, I'll just walk you through.
yeah,
Friday, I remember it was
totally.
up. I don't know, whatever it was up. When it was near highs, I really said it's probably more short than a long. I didn't even short it though then. I had
Hmm.
to pay to borrow it and I got lazy and I didn't do it. And sure enough, it pulled back like 7 or 8 points off its high. And some people in Inner Circle did it and made a lot of money. I was kind of pissed I was too lazy, but I was going to be traveling. So I just said, screw it. Anyway, since then, since the pullback, I didn't buy it, and we've seen it's gone straight from that pullback. I think it went to like 45, 46, and here we are up
Hmm.
10 at 70, and it's the hottest stock on Wall Street at the moment, outside of a few names. Here's how I look at it. I didn't short it again today. And someone asked me, they said, you still think it's probably short around 70 this morning? Well, I said, yeah, but I really won't be focused because it might go up another 10 or 20 before it wants to come in. And I'm too busy with stuff like BKTX and Micron to really fight the trend. So there is a trend. There is a dearth of deals on Wall Street, right? Like, there are no deals. And this is one of the better known names. So it almost doesn't matter that they're losing money, right? It almost doesn't matter that it's been around for 19 years and it's no longer in its like best case trajectory, right? Remember, this company was killing it early on, was this hot name. It's like slow growth late in the story, which to me is notorious for a deal you want to stay away from. But there are no deals. There's not a huge float, and it's an easy to recognize name. So I totally get why it's going up. Like, it totally makes sense. People are having fun, and that's what they're doing. So when does it stop? Probably stops in the next week or two, I would think, but I don't know the exact price. And if someone were a fundamental investor, right, I would say, oh, this is the last thing you want to buy. But if someone were a fundamental short, they also, if they're good, know just because fundamentally it doesn't make sense here or the valuation doesn't make sense, that at this stage, so early in being public, it can go up another 10 or 20 easily before it pulls back. So it's kind of a no touch for me. I'll probably put on a short today, tomorrow, maybe the next gap. But fundamentally, like, once the lockup's done and there is stock to sell, I doubt it's even $50. I wouldn't be shocked if it's like 30 or 40. That's my earnest opinion. I think it's just late in the game. They're trying to remake the company into a growth company. They even put AI in the book, but I think it's late in the game.
Got it. Right. Lack of deals, but there was another deal that went public today, and that was Donald Trump's media company, the SPAC deal with Digital World Acquisition, trading under the new ticker DJT. DWAC was a big meme stock back in probably, I think it was 21, 22. What this DJT is up like 34% today. Yeah. What's your opinion here?
My opinion here is it's the ultimate like meme stock right now. It's a proxy for Trump. It's not too big of a float. It's constantly in the press. It's just the ultimate proxy for people having fun. And if you are going to have fun, you better know your risk on any given day is being down 40, 50%. It's silliness. I asked someone yesterday, I was like, I don't even know. Like, what is it own? And they were like, it's Truth. I checked. I said, is it Truth Social? They said, yeah. I said, like, the revenue of Truth Social is like $1 million. So no one is fundamentally investing behind this company. It's emotional trading. And that can go on. It's the closest thing we have to GME right now. And that can go on forever. When I was a kid, meaning 20 years ago or whatever, in 30s, early 40s, I was probably be trying to fight it and short it. I'd probably be making money, but it's so stressful. Sometimes it's not worth it. It's definitely more a short than a long here, but it might take weeks to unravel. And if he gets elected, it could go up another 50%. So this is just gaming the emotion of the street. There is more retail excitement today in the last couple of weeks than we have seen on Wall Street since 2021. Hands down. That's it.
Mm-hmm.
And the way to gauge this excitement and the way to have fun with it and make money every day is ALAB, RDDT, now what's DJT. Yesterday, even GME was up 15%. And I think only because it's literally going to announce earnings this week. And I don't think it was because anyone thought the company's doing well. So these are just emotional gauges for how bullish the atmosphere is at the moment. So fundamentally, I think both are kind of silly. I mean, I know
Mhm.
both are kind of silly, but they might take 3, 4 months to play out and actually go to the downside.
The Reddit deal was an IPO. DJT deal is a SPAC. You have a lot of experience in SPACs. They were the hot thing back, 3 years ago, but have really fallen off the map at this point. Do you see a future for those kind of mergers to continue, or we're going to be back in mostly IPO space moving forward?
Zero. These things aren't happening. They just kill too many people. And that's coming from someone, my partners filed something called Just Another SPAC, and we kind of hit the top of the market. Like literally, we're on the cover of the journal, and it was like Just Another SPAC because it was a silly name. But
Mhm.
I think there was such pain and suffering by so many investors and so many brand name guys like Chamath, cost people so much money. I don't see Wall Street really being too accepting, as they should. They create so much dilution. And the bottom line, if it's a good company, it's going to go public via the ordinary way. Will there be a few special deals? Look at DraftKings. Of course there will be, right? But overall, it's not going to be a popular theme on Wall Street for a very long time, if ever again. And if it isn't, it ain't going to be now. That'll be IPOs. It'll be many years from now.
All right. A question we got from Twitter from Benjamin. He says Palantir finally looks ready and wants your thoughts.
Yeah, I agree. Someone asked yesterday. I said, I have so many names I like that I'm doing well with. I'm not putting it on. I had it on last week. I sold most in the 25s and it gave up an average I like the 21 day. And then I came back into it. And I basically said, it's thick. It doesn't always move as smooth. It tends to go on these runs that are consecutive days, has massive moves, and then gets congested, sometimes for weeks or months at a time. So I said, my gut is it gets through the 27 and it's a $29, $30 stock, especially if NVIDIA is over 1,000 and the AI theme continues. That it's not for me because it's a bit crowded, especially via retail, but I still think it works. Just because I don't like something for me doesn't mean I can't like the stock. I think near term, as long as the AI theme and as long as the market holds up, yeah, probably 29 or 30. Just, not my favorite company, but I get why people like it. And they've had two really strong back-to-back quarters. So it makes sense to me. And
All
today
right,
does
great.
look a little bit better. It's just when I was long it stopped right here a couple weeks ago and seems to have some resistance right here.
Just another reminder for everyone who's with us live. If you have questions for David or want his thoughts on a specific stock, submit those now, whether you're on Twitter or YouTube or Facebook or in StreamYard here with us. Okay, David, last time you and I talked was pre the Fed. So now we are post the Fed, and you went risk on after the Fed. You tweeted this out saying, "Who heard Powell say the market has it right?" I went mad bullish at that moment. So what was it? I mean, the market has it right, but what was it about Powell's press conference last week that told you, yes, it is time to be long, time to be bullish? Obviously, we got that updated summary of economic projections. We're still expecting 3 rate cuts this year. That was great. Exactly what the market wanted to see. But what was it about Powell specifically and what he was saying that had you feeling like this?
So a lot of times, especially when there is, it's not nebulous, right? In terms of what we're doing, we all know eventually we're cutting. We all know we're getting close. So when things are less cloudy and he's so clear, you have to look for that one opening that might be something different than what's expected. Now, the actual statement, the dot plot, was a little different. I and some other people in the street thought we'd be at 2 cuts, not 3, and it remained 3. And that was bullish. And I was long into the print, but a little bit more conservative, meaning, I still wanted to hear what he had to say, and I thought he might be a bit more hawkish. Turned out he wasn't, but still the market didn't react much. And I said, okay, people, we're either going to sell the good news or he's going to say something to grasp onto that's even more bullish. And I said, really, at this stage of the game, that all comes at 2:30, not in the 2 o'clock statement and results. So 2:30 happens. He's speaking and literally says one like 5, 6 word sentence in between the rest of the sentences. And he doesn't highlight it. I just hear it. And he basically, in between a couple sentences, says, the market had it right. And I was like, what the? So did he just say the market had it right? What Fed chairman's had? And I was like, for this moment, and by the way, when I say mad bullish, that doesn't mean we've come a long way. I'm a bit more conservative up here, actually a lot more. But I was like, for this moment in time, your Fed chairman just told you the market had it right. We are buying. And I bought the Qs, I guess it was 441s, 442, and we continued to roll and put on some additional risk. I honestly forget which. Anyway, I had NVIDIA, Qs, XBI. And I said that some TNA, some IWM. But the point is, so you just had our Fed chairman say the market had it right. And that to me was as strong as a signal. If you're going to read tea leaves, that's probably the biggest, smelliest tea leaf you're going to get in your life. So I took it and I ran with it, and it worked out okay. The thing is, we've gone up so much. I only think that statement can only get us so far. So we might have to, churn for a bit. But it was an amazing opening he gave us, and we took full advantage. And that's how I played the Fed meeting.
There's some important inflation data coming this Friday, but for the market, it is a short week. The market is closed on Friday. The Fed's favorite inflation print will be out Friday morning at 8:30 a.m. Eastern. That's the PCE and core PCE price index. The expectations are for like a 2.5% print on the headline number, 2.8% print on the core number. The market, though, again, is closed in observance of Good Friday. Do you expect any delayed reaction to the PCE on Monday?
Only if
because
it's
of the
really
closure on Friday?
outside of bounds. So in other words, after that last meeting, I think people are pretty comfortable that unless we remain hot, meaning there is a number that's way above expectations, I think they're pretty set. Back half of the summer, we do finally get a cut, and they can kind of look past PCE if it's soft and look past PCE if it's hot. Where they can't look past is if it's really a hot number. We are at the stage that he admittingly, has said, he's somewhat data dependent. Yes, he's pretty comfortable where he is now, but if we get a few hot numbers in a row, it's very possible we could get one rate cut. So there's some people on the street. Who was it today? I think it was Morgan Stanley CEO who said, don't be shocked if you get zero. So at some point, the more hot numbers we get, we won't be able to look past them, especially as we get further and further into the year. It's March already. There was a point where we thought we were getting 5 or 6 this year, right? And March would be the first. So I get it. Wall Street's gotten comfortable buying the dip and continuing to say rate cuts are coming. That's enough. In fact, that's what Kramer keeps preaching, that as long as rate cuts are coming, whether it's 2, 3, or 4, it almost doesn't matter. However, if it becomes 0, it's going to matter. So that would come via a super hot PCE or hiring going nuts and wage inflation getting crazy. So that's how it matters. We got to look for numbers that deviate by like 40 or 50% beyond expectations. So yeah, we could have a delayed reaction as long as it's not close to the expectation.
Okay, great. All right, David, tell me about, as we wrap up things here, we have 2 trading days left after today. So tell me about the top setup that you're monitoring in the next 2 sessions on your list.
Okay, I'm being as direct as possible. This is what I told people on Inner Circle. I'm like, okay, BKTX has been a focus for a month. We kind of killed it from 77 during the secondary time to 97, then bought on the way down. It was kind of painful, 62 to 65 a couple weeks ago, and then it was glorious again. So I said we had that. We had Micron that just went, 15 points from our entry. We had AMD short, and we had AMD long. We had CLSK, and and NVIDIA I bought last week at 850, and it was 960s. So what I basically said is, it's like Christmas. Just hold on to your gains. Don't create trades. Manage them accordingly, meaning don't forget to take profits. And if something comes up, I'm all for it. But I am of the opinion that it's been a phenomenal week. I know it's Tuesday, but the week's done for me and most of Inner Circle. I hope if they're listening to me, don't push things. If a great idea comes up, fantastic. My top setup is I don't have one. Hopefully one comes. That is, I'd love to sound great and impress everyone, but my top setup was last Friday when I got to buy MU on that dip, when I got to buy CLSK. But the problem is CLSK was 18 then. We're $24 right now. So am I excited to buy it? No. Do I see a lot of shorts? That would be the only thing. There might be a cute short in RDDT over the next day or so, maybe even today, if not tomorrow. Otherwise, I'll be a buyer of Viking on dips, and that's what I see for this week. And I hope some volatility gives me more opportunity because we're a bit long in the tooth in the markets.
Great. All right. For everyone who's still with us live, you can go to t3live.com/DP to apply to join the inner circle with David Prince. Again, that's his trading room that he runs every single day, where he trades live and lets everyone see and hear what he's trading and as he's doing it. And you get a lot more than just what you're getting here. So again, go to t3live.com/DP to apply. David is a real trader, so we got to let him get back to the market. Have a great rest of your trading day, David, and everyone else also.
Thanks for joining us all. Have a good day.